next 6 or 9 months. Doesn't matter if you're just thinking about it, if you're for 100% for sure about it, get pre-approved, right? Because there's so many things that maybe somebody qualifies for a certain program, but you have a much better program by just paying some debt off or saving some more money, or you may be ready to go right now.
On today's episode of the Peddler Perspective, we've got Jason Chandler with Rate.com. Jason's the loan officer, licensed in how many different states?
I think almost 20, all through the Midwest and some of the East Coast and West Coast.
All right, so today we're going to be talking about ins and outs of loans. I'm going to focus on first-time home buyers. Going to focus on what it takes to be able to go through the buying process from the mortgage side. Well, Jason, like I say, tell us a little bit about yourself. I was going to say, how long you been at this deal?
First, thanks for having me on. Appreciate you letting me be here. I finished my 23rd year and going on 24th year. I've been at Rate since 2008. So we've been doing it for a long time.
Long time. I say,
long time.
I say, and you went to college for this?
I went to college for psychology, actually. And so I was going to be a psychiatrist, and then things happened and life changed and led me to the mortgage business, where I love helping people out every single day, and I love helping people get in their home the first time, second time, third time, and build that lifelong relationship and not just a one-time transaction.
That's a nice thing about Jason. You can call him after that and ask for marriage advice.
This is true. Marriage advice, parenting advice, like friendly advice. Lots of advice for everybody. That's correct, yes. But I get to act as my psychiatrist sometimes, with people, which is, again, it's part of that building that lifelong relationship, is getting to know them and getting to know where they want to be at and what their goals are and what where they want to be at with life, their next step. And so it's about, knowing and find out what they want and what they're looking for. And so we can figure out a good game plan.
Yep. So when we're talking about this, it goes all the way from the first-time home buyer to, we won't get into a whole lot of this, but like I say, with being licensed in 20 states, I mean, people will actually finance second homes in Florida, if I'm not mistaken.
Yep. Actually, I tell people a funny story is most of the states I've got licensed in, I've had a veteran at some point in the last 10 years PCS to a different state. And so if you give me a heads up, you're going to be PCS or moving, I'll go on and get licensed for you. I've had a veteran that went from Scott to Florida to Virginia to Arizona, and I I've been following her around the country. So I don't mind helping out. And again, that's why I've gotten my license in most of my states, is because, again, I want to be there from the first time, the second time, the fifth time, to, helping the kids out, grandkids out, that kind of stuff. So that's my mindset. So.
Well, I would say, I know we've had a client that, in Louisiana, that we'd sold a couple of houses for him, and I think that they basically, they went down there to buy a house and said, hey, we could do this.
Yep, and I got a license for him, and he also was a veteran, actually. He was not PCSing, but same thing. Again, I want to make sure I'm there for them and, make sure they feel comfortable with the process. Buying a home is super stressful, so that comfort and the trust is a really important part of this process. So.
Yeah, so that's one of those things, and like I say, whenever you get into the mortgage and the mortgage industry, it's one of those things that I've personally been in it for a little while, and I couldn't stand it. It was not for me.
Yeah.
Had a true factor, like I say, just not to digress, is that I've actually had a job cleaning hog crates, and most people don't know what that is, but it was a better job than doing mortgages. It just wasn't for me.
So. And my story actually started with Brad as being my boss. For several years, which I got in lots of trouble because I was a smart like teenager, and I got fired a few times.
A few times?
A few times I got fired, yeah. And then my mom had to call and beg for my job back, which is, embarrassing nowadays. But and then he came to work for me for a while and realized he didn't like that, the mortgage business. And, again, he settled into something perfect, for you guys, which is, mortgage business on my side has been perfect for me for 23 years, 24 years.
It is.
So.
It's one of those things that was one of those, just so what people will understand is that whenever they deal with Jason is that he does understand the rules. The thing about it, whenever you choose a mortgage lender, for me, is that basically whenever I walked in and he handed me a book that was for Fannie Mae and a book that was for Freddie Mac, and he says, read them, memorize them, and understand what they mean. That was the training portion of where that was. And the issue that you have is that the difference is that whenever people do go to Jason, if Jason says that he can do it, then in most cases, and I don't know of any that where it didn't go through, but there's definitely some of those sometimes where you say, oh, this is very questionable. And there's never a guarantee given, I don't think, but
Well, I mean, nothing's guaranteed in life, but if you know what you're doing and know the guidelines, then it's easier to put that person in the right product, right? So when somebody calls me, and that's where I started my training was I got a big book of guidelines, and then so I read them. I hate reading, but I read them to understand them because when people ask me questions, I want to be able to answer those questions correctly, right, of what they should be doing. Again, that lifelong relationship is I want to put them in the product that makes them successful and makes them help build their wealth and their growth and their family life. And so I just, I ask questions on behalf of clients. Sometimes they do ask me, and I am stumped at times, but I will find out the information. I'll get the exact plan of action, and then we'll call them back with the correct information. So again, it's just, there's so many different factors that play a role in what's the best product for somebody. And I have a lot of people call me and say, well, I've done my own research on Google. Well, I mean, AI is not always correct, right? Like sometimes that you need that person that's been through the trenches and been through the situation and asking those questions. We ask a lot of important questions and sometimes deep questions and to figure out what the best product for them is. And again, I know like first time home buyers, they call and they have no idea what they're doing. And so they'll start with something and then I'll say, listen, you probably have no idea what to ask, no idea what you're doing. Would you like me to explain the process? And most of the time I get a laugh in return and say, that's exactly, I have no idea what I'm doing. Help me through the process. And so again, that's when the questions started, what you're trying to do, what your goals are, where you want to be at, what's your monthly payment, do you have any money to put down, are you getting a gift from somebody, you're trying for max financing. So you're asking those questions just kind of get a starting point of where the next step needs to lead.
And like I say, that's one of those things that not to digress a little bit, but I say one of those. So Brenda has been in the real estate business for 24 years, somewhere right in that neighborhood.
Yeah, 24. I actually knew Jason before I knew you. I met Jason. He was the candy man. He used to come by and deliver candy.
Forgot about that, yeah.
My dad said I should go, from Farmers National, work a short stint at Center 21. And so he came by and did a Center, when I was at Center 21 delivering candy. So I went back to Farmers National and we ended up closing a home in the country. And it was a stressful situation. There was a little stress at the end, and my dad's like, "Oh, them Chandler boys." And then I was at closing. I was like, "Man, I wonder if this guy has a brother. Does he have a brother?" Did not know that I'd meet him on Match.com. Like 2 weeks later. Yeah. So that actually worked out really well.
I should have thought about it at the time. Again, back to psychology, I didn't think about it, but because he's a much older brother on the Chandler side, and so that's. I don't know. Brenda's a lot younger, so I didn't know if that was the age appropriate or not. So
there you go.
Just kidding. So we did work together beforehand, and then obviously, life takes you certain directions and has certain doors. And again, the timing was right. As met, and it's been several years later, so it's all worked out.
Yeah. Definitely has worked out. All right. So basically, So like I say, the candy man, that's one of those that whenever we were out there and Brenda was in an office.
Yeah, over at Center 21, actually, is my short stint in Waterloo at Center 21.
Yep.
Before going back to Farmers National, is where I met you. You would deliver candy.
Go by Snyder's. Yep.
Yep.
Market, yeah.
Yep.
So that's what I did for the first several years of my career. Actually, I would buy candy, put my labels on it, and just was a reason to go in the office to kind of create opportunities. So to meet new people and to kind of get to build relationships, that kind of stuff. So I would take candy, promo items in. Wear my Cubs gear, because I'm a huge Cubs fan, so I know we're in Cardinal territory, but I wear my Cubs tie and my Cubs shirt and my jacket, my coat, my hat, and my Cubs shoes. I have Cubs shoes too, and it just creates conversations. And so then you lead to people having question mortgage, that kind of stuff, to kind of break that wall down.
You were bald back then too.
I've been bald since I was 26. Yeah, I gave up my hair. Yeah, I had my Eminem phase, growing up, and then so I had my white tipped hair for a long time, but then it got really thin, and so I gave up on that. Yeah.
Yeah.
So I figured bald is beautiful, so might as well go with that route.
There you
know what I mean?
Yeah.
So I was saying there a joke. Man, my wife Jenny's gonna kill me, but so. As the older I get, I'm getting wrinkles, and so that's why I didn't have any hair on my head. And then she made me grow a beard, 7-8 years ago, because she said I started getting wrinkly, so I looked like a wrinkly baby. And so that's actually why I have a beard. I call it my sexy beard, but that's what my wife tells me to wear a beard, so that's why I got a beard. But yeah.
Yep. See, it's this humor that was at the closing table that I was like, closing with Jason. Wonder if he has a brother.
Yeah. Yeah.
Kind of fun. Kind of fun,
Kind of fun.
We do have fun. I try to have fun in my closings. All right. Buying a house is stressful. you have so many things to go through your mind of, is this where I want to be at? Is this the right price range? Can I afford this? Right school district for kids? Like, there's so many things that people have to process during this, buying. And I just want to keep that loose, right? So they trust me to have the right guidelines and have the right conversation, but then also I keep that stress level down, and then again, we have a problem, we fix it, right? We jump the hurdle together. I tell people all the time, like, if there's a problem at some point, as long as we work together to go together and get the finish line at the same time, everybody's happy, right? So,
that is the case. Like I said, we've also, but it's a matter of aligning everything whenever the paths cross at the right time and the location. Everything all has to cross. All the X's got to cross and T's got to cross and dots got to I. But right there at that time.
The end goal's the same. We don't have to be getting all upset with each other. We just have to get to closing and
and do what's best for the clientele, right?
Yeah.
Like, but not every client's correct, right? I'm not the believer that customer's always correct, but again, it's about having that conversation and setting expectations correctly and realistic expectations and knowing where the road's supposed to lead and having every direction, point out along the way. And again, I will be happy to educate people, and we educate everybody as much as we possibly can, and they should ask questions when they don't understand something, and just ask the same question if you don't process it the first time and 15th time. It just always having those civilized conversations just makes this process so much easier. And even real estate agents, when you guys are dealing with realtors, like, there's a problem, let's talk about it, come up with solutions, figure out how to fix it, move forward. Instead of bickering, it's just easier to communicate and making this process just, again, if there's somebody in the process that causes an issue, it just makes it a whole lot harder than it needs to be.
Absolutely.
Yep.
Absolutely. So, if you don't mind, let's walk through a little bit. First-time home buyers. Let's look at that. I mean, everything from the pre-approval process to questions that they should ask. I mean, for things that you can possibly answer, as far as that go. Because I started out this, but basically the buying experience has changed from it was 20 or 10 or even 5 years ago, but for sure 10 years ago, where people used to actually go look at a house and then they would say, oh, I like this house. And then they would go get their parents or some other contractor that had the knowledge of a house, and they would come look at the house, and then they would make an offer on a house, and then the process would move forward. But today's market it's basically, I think it's the first step is to get pre-approved, because you're going to look at a house and it's going to take 45 minutes. So you get to walk through a house and say, I'm going to spend $400,000 on a house, and you're going to do all your inspections afterwards. So, what do you see has changed in this whole system?
Well, it's a lot more now, right? So you have to make a decision now. But I've been telling people for 24 years, if you're planning on buying a house in the next 6 or 9 months, doesn't matter if you're just thinking about it, if you're for 100% for sure about it, get pre-approved, right? Because there's so many things that maybe somebody qualifies for a certain program, but you have a much better program by just paying some debt off or saving some more money, or you may be ready to go right now, but then having that conversation about where your budget is, where your purchase price is, where the assets need to be at, you can get that correct game plan, right? So, but yes, before you waste your realtor's time, it's good to get pre-approved, because what you don't want to do is look at a house for $400,000. Turns out your budget's $250,000. Now everything else you look at for $250,000 you don't like, because your expectations in your mind is a $400,000 house, but you can't afford it. So having that game plan up front of, here's my budget, here's my purchase ability, here's the money I need, having that conversation. And I have the conversation with everybody like they're my kids, right, and my friends, is what can you actually afford, right? You don't want to get into a house and not be able to afford.
What do you want to afford?
What do you want to afford? Yeah, like you got spending money you have to do. You have fun money. You have groceries. You have gas money. You have, electric bills, water bills, internet bills, all that kind of stuff. And so, like, what's your actually budget you can afford a monthly payment? If you look at your bank statements, a lot of times people are spending money on just waste, right? Just because you want to have fun, which is fine because you got to enjoy life, but also sometimes cutting a few things here and there, and now you can afford a little bit nicer house by cutting out a few things every month, right? And saving a little bit more money and, and having that plan. I know it's not fun, every time I just say do a budget, nobody likes to do that stuff. Like, nobody likes to do that, but it's an important part of the process. And again, having this conversation 6 months prior you can get everything you want to get accomplished. Even if you have marginal credit, you can get it fixed in 6 or 9 months. Even if it's terrible, you can get it fixed in 6 or 9 months. But there are programs available for not great credit and bad credit. But if you work on that getting up, it may give you better options.
And a better interest rate.
Absolutely, yep.
So credit score, like I say, basically it did correlate to interest rate. Does it still do that?
100%. Yeah. So when you do conventional, your credit score depends on, it dictates your interest rate, dictates your PMI percentage you're paying, FHAs, different guidelines for credit scores, VAs the same way. I mean, if you have better credit, you get a better incentive, better rate. So, I mean, it just gives you a better deal overall. Now, obviously market changes every day, so it's about affordability when you're buying a house, right? So again, that's why calling 6 months in advance or 2 months in advance, or even before you look at the house, you can determine, is this house I can afford, right? Is this something I can get into and build my family with or build equity into? Is this the right deal?
So you're suggesting proper planning?
Yeah.
That's what it sounded like.
That's what I'm suggesting. I would say like 60 to 70% of our clients call and they just either looked at a house, they're sitting looking at the house right now, trying to make an offer. I had 2 people Saturday morning that say, we just left the open house, we're making an offer right now, I need to get pre-approved, and we're supposed to make an offer by Sunday. So again, we try to be available 24 hours a day. My team, Kyle, and I are trying to be available, but sometimes the timing is not right where we're not there. So again, calling on a Thursday or Friday is even more important than calling on a Saturday at 5 o'clock in the afternoon, right?
Absolutely.
It's better. It gives us more time to process the application, more time to look at it. I'm not saying that do bad things on Saturday, but if somebody calls me at 5 o'clock on Saturday, if I'm available, I may not be able to thoroughly look through bank statements, pay stubs, all that kind of stuff, and make sure the file is super strong, right? And so calling on Thursday or Friday gives me the ability to look through all the documents and prep correctly.
Right. So, and that's one of those things that, that brings us into the difference between a pre-approval and a pre-qualification. Is there a difference in rate.com and in the rate neighborhood, or a pre-approval is they've ran basically a credit score type thing, but haven't required bank statements, or to that effect, or is there different levels of pre-approvals or pre-qualifications?
So there's different levels of pre-approvals. Rate actually has the ability to, that's AI generated, but they actually look through bank statements and pay stubs if they upload them on our app. So just to clarify, our website is rate.com/Jason Chandler for my personal website. If you go to rate.com, it goes to corporate office. But if you also create an account and do a pre-approval online, if you upload your bank statements and pay stubs and W-2s, the system actually reads that and generates the actual income that you can use. We still have to manually adjust it sometimes based on variable income, promotions, that kind of stuff. But the majority of times it figures things out. So that would be a pre-qualification, right? We've already looked through income docs. We're good to go. We also have a thing called a PowerBid. So if you're trying to make an offer and there's a multiple offer situation, we actually send it to underwriting before you make an offer. So we actually have loan commitment before the offer is even made.
Wow. I had no idea that could come out there.
That's called a power bid. So it's like a cash offer because all the income docs been signed off on underwriting. Everything is done. The only thing you have to do is do an appraisal. And sometimes on conventional Fannie and Freddie, we run through the system, we get a PIW, which is a property inspection waiver. And so sometimes we need an appraisal. Now, it's not every time, but sometimes the system says based on a down payment credit score, you don't need even to do an appraisal. So you can make an offer if it's the right offer and waive your appraisal and have almost a cash offer by just prepping yourself ahead of time and being ready to make that offer.
I had no idea that was out there as an option.
Yeah.
So that's referred to as what?
Power bid is what we call
PowerBid.
it. Yeah. So all lenders have different words for it. Most lenders do that, not everybody. But yes, you can do that. It's strengthen your offer when you have a client that you want to.
How often do you do those?
Not a ton, like once or twice. I mean, we're relatively well known in our area, so most listing agents know who we are.
Yeah.
And so a lot of times they understand if we looked at the pre-approval, it's pre-approved, right?
Yeah.
It's not like different companies where you get pre-approved and are not actually pre-approved and it falls apart 2 weeks later. I mean, I still have a 24-year record. If we say it's pre-approved, they're pre-approved, right?
Yeah.
I haven't still not had a file fall apart on me 2 days prior to closing. I'm knocking on wood, but it's been almost 24 years of never having that happen to us. I've never called a real estate agent 2 days prior to closing and say we can't close. That's never happened on our end. If there's an issue, a problem, it's caught up front, right? If somebody says they're on W-2, they make $60,000 and we got pay stubs day one and they're making $20,000, that's caught up front. There's never a last minute issue. So everybody knows that. So if we send a pre-approval letter, it's a valid pre-approval letter.
Yeah.
That's very important because, like I say, that's one of those things that even online now, they've got all kinds of online lenders, and that's one of those that you say, okay, yeah, I'm pre-approved, but they didn't look at anything except for what I told them.
Well, and if you're doing that, how do you know they have your best interest in mind, right? You're another number. And back to a lifelong relationship, we look at what's best for you today, tomorrow, next year, the year after that, right? Like we had that conversation of where you're going, what's your mindset, how long do you want to live here, what are you planning on doing with this property, just to have an idea of what the best product is. Because there's so many times that somebody will call me and say, well, I've done the research, I want to do an FHA loan. But now they're pre-approved and doing USDA because that's a better option. But turns out the other mortgage company didn't offer USDA, right? So it's best to do your research with a couple companies. Now we have multiple companies we work with internally, so we have pretty much something for everybody, right? The only thing we don't do is a portfolio loan. And that's where you got your handshake because your mom knew the banker, and so you get money borrowed even though you don't qualify, and it's on a adjustable rate. We don't do that, but we do pretty much everything else. And so again, it's just because you're going online and AI says this is your best option, or somebody from California says FHA is the way to go, they may not offer those special products. They may not know about IDA. They may not know about the first-time home buyer loans. So giving you this product, it turns out it's not the actual best option for you.
Yeah, and that's one of those we ran into just the other day, and that for an out-of-state lender that doesn't even understand about the grants that are available to some of the first-time home buyers, and it's not even just a first-time home buyer. It's somebody that hasn't owned a home in 3 years.
3 years,
Some
yep.
of these.
36 months. Yep.
36 months. So whenever we look at that, so if you don't mind, go into some of those kind of details on those things that are out there that are incentives, because they're not really a first-time home buyers anymore. They're actually just new home buyers.
So some of them are specific first-time home buyers. Some of them can multiple use, your second time, third time use. It just depends on what you're trying to do. And so there's different grant programs, which is IDA, Illinois Department of Housing Authority. There's multiple IDA products as well. If you're in a certain income level, you qualify for it. It's 1% into the transaction. Some are forgivable, where you live there for 10 years, you're forgiven. Some are deferred, where you pay it back, once you sell your house in 10 years, 15 years. Some you pay back at 0% interest rate every single month. The single county has a grant program that's available as well. I mean, there's conventional products. If you have a little bit of money out of pocket, you get a discounted rate in PMI insurance. There's also a first-time home buyer. Even if you make $200,000, you put 3% down, you still get a discounted rate. So there's no income limitation on it. Some of them are the AMI, which is the annual median income. So if you're at a certain level, you get discounts as well. So there's so many different options. Again, back to if somebody preps, we can discuss those options, see what's best for them. But you can, for this is not first-time home buyer related, but Fannie Mae just eliminated the credit score. So we've had a couple pre-approvals that are 470 credit scores. They have money to put down, and they're putting 25% down. It's approved eligible in the system. So there's no credit score guidelines
requirement.
No, not for conventional. So there's just different options. So it never hurts just to try, right? You never know the final answer unless you make an effort and give it a shot to see if you can try it or not. Worst case, as I tell you, is you're not ready to go. Here's the 3 or 4 things to do to get yourself ready to go in a couple months. And if you do it, we fix it, right? You can fix it.
That's what I like, is that if somebody doesn't know or isn't in the right spot, is that you do direct them. If you do this, we can get you in a few months ready. It might not be now's the time, but we can be ready here in this time. And I do like that you do that.
Well, because if we don't tell them, who's going to tell them?
Yep, exactly.
Right?
It's education.
Some people have no idea what to do, and they're just strumming along, and we just give them the exact role play. Now, I'm not going to fix your credit for them.
Yeah.
Right. I'm not going to call their credit bureaus and tell them how to fix credit, but I'm going to tell them what to do, how to call, how to pay something off, what to pay off, what not to pay off. If open new credit card, like whatever the case is on how to get the credit score it needs to be at, we instruct them what to do.
Does Rate still have that the system that if you do this or this, and it changes it basically mocks up and tells you what the credit score will change to?
Yep. Call Credit Advisor, and we still do that. Yes. It tells us what to do exactly. So Kyle and I, 99% of the time, know exactly what to do, and we're spot on whenever we run that of what they should do. So it's just, again, back to the experience. We have 23 years experience looking at credit reports. So most of the time we can tell, pay your credit cards down to less than 30%, open new credit cards, you have no positive credit going on, pay off a collection from 12 months ago. Like there's just different things we can do, and we know what to do before we even look at the credit advisor.
So two things, not having credit. We come across people who don't have credit.
Happens, like I say, especially younger people. I mean,
Yeah.
said
But
I'm
they
not
can
gonna,
still
I'm
buy a
not gonna
house,
get,
right?
I'm not gonna get in debt. I'm not gonna do that. So I mean, so it was actually used to be a way of life, is to say, okay, I'm staying out of debt. But now that's hard to do. But now that
So paying cash is not king when you want to buy a house, right? But you can still qualify with no credit score. But some of the programs require trade lines, so non-traditional trade lines, so a cell phone bill, a car insurance bill, a water bill, that kind of stuff. So the ones that are 20, 22 years old that live at home with mom and dad, sometimes we run across issues with that. A few years ago, they stopped accepting the authorized users as well as valid credit score.
Oh,
So if your
really?
mom and dad put you on credit card, that helps with credit score, but you have to have at least one trade line in your own name in order to have that as a valid credit score. And so, just like I had a conversation with my kids, I made them at 18 years old, open a credit card, use it, pay it, stay below 30% at all time, and get a credit score up really, really high, really quickly. Now, they also changed a few years ago where you have to have an account open for 6 months in order to get a mortgage score. So you do have to have an account open for 6 months. It used to be 60 days, but now it's six payments.
really.
So again, prepping 6 months in advance, right? I call and say, hey, you're not quite ready. You got to open a credit card. You're moving out of mom and dad's house. There's no credit score on here. Open a credit card, go to the bank, open a car loan, open a personal loan. In 6 months, you'll be golden, right? And this is a plan that, so again, in 6 months, you can fix it. Back to first time home buyer stuff, again, there's so many different options and sometimes limited funds. I mean, like USDA, if you qualify for those programs, there's so many times we come in and you bring literally no money out of pocket, right?
Well, you can borrow up to 102.5%, if I remember correctly.
Yeah, it's 100. Yeah, because you get to roll in the funding fee. So you get to roll in the USDA fee on top of it, but actually you can roll in technically 100% of the appraised value. So it's the only program that if a house is appraised more than the purchase price, you actually can roll any kind of closing costs, homeowner insurance into that loan amount up front. The only program that allows that. So if your house appraised for 150 and you buy it for 140, technically you roll everything. You can't get money back, but you can roll everything in that and come with zero cash at a close. Now, I do the best we can for numbers. I'm good with math, but not perfect with math. So I try to get within a $500 window, right? Because we're rolling in your insurance, rolling in your closing costs, rolling in your prepaid interest, rolling everything into that loan. And so I try to get as close as possible because, again, you can't receive money back unless you put it into the transaction. We verified that.
Right.
Rental, rental history counts, correct?
If you can verify rental history.
So-
we have a lot of issues with people pay cash for rental, and we cannot verify cash.
Okay.
So if they rent from a management company, we can verify a verification of rent with that management company. But if it's for an individual, it doesn't count unless you have 12 months of canceled checks cleared, or you show 12 months of pulling the cash out of your checking account, and it's the same amount every month. So sometimes we have where, a landlord may say, well, if you fix this window, your rent's only $200, $800, then that's not verifiable because now you're only pulling $200 out 1 month. So you need to be consistent for 12 months, and that does count. And that does have an effect on being approved or not approved. It's good, the payment shock, right? So if you're paying $1,200 a month for rent and now your new payment's $1,200, there's no payment shock there.
Yeah.
So we verify that. But again, if you can write checks to your landlord and you have show them cleared, or pull the money out of your checking and keep receipts, the withdrawal every month, that shows a rental history.
Interesting. So yeah, that's one of those. So the system that we use, actually, you can they actually now Buildium that we use for rentals, actually now they can pay to have that report to their credit bureau as an on-time payment for rental.
For $5 a month, the person can actually have that reported to the credit bureau, their rent. So and that they pay on time and all that. So it's a plus.
Yep.
You could circle back to grants and so forth. And I heard you say that St. Clair County has a grant.
Yep.
Have you ever worked with a town or that has anything for buyers, first-time home buyers?
I have. They have to be approved with the government grants in order to be used towards FHA loans. But you can use those as well. But we need the terms and conditions of how it kind of works and how it's structured. And if they're giving a check, if there's a second mortgage attached to it, we have to have those conversations with the city or all the different grant programs.
Yeah, I was just curious because it seems to me that would be a great, there's these small towns that are wondering how do we get young people back into them and that are a little further on the outskirts of maybe a commute to St. Louis. But if you could just get more people to move into that town, I was just curious if there were towns that were working to get more first-time home buyers into that town, I guess.
There are a few towns, yes, that we've actually worked with before, and there's a few towns that we couldn't accept because they're not actually set up correctly.
Interesting.
So if they have, if the towns want to call me and have conversation about that, I'd be happy to kind of direct them on how to verify that. But yes, there's some towns we deal, they get $5,000 for being a first-time home buyer in that town, or
town. Really?
yeah. So it just depends on where they're buying, if that makes sense.
Yeah.
But it's always good to ask those questions, right? It's always good to ask those communities and see if they have anything to offer, right? And so,
Or even to help a community get started with something like that is wanting to grow, or help more of that. So that's why I ask as much as anything. Is there any way to help these communities bring people in?
yeah, there's like, since I'm licensed in almost 20 states in America, there's different states that offer stuff like that too. Like in Florida, I can't do it because I don't live in Florida, but they have a hometown hero. So if you work for any kind of hero organization, you're a firefighter, police officer, you get $25,000 just for being in that industry as gift from the city, right? That's it. Now, again, I can't use that product because I don't live there, so we refer it out to a different loan officer that lives in Florida. But there's different things like that, so it's always good, again, to answer those questions and ask those questions and, just find out what they have. And again, just like myself, I direct them in, put them in the right direction. I can't help them, I don't get paid for it, but we put them in the right direction to help them. That's beneficial, right? If that benefits them and they can make, save more money and they can do a better product, it's better for me to direct them there and create that long-term relationship, hopefully, than to try to make a quick buck, if that makes sense.
If everybody would learn that would be
If
great.
everybody would learn that, that's it. That's
Yep.
it.
Yeah.
So, as far as any other things, like say, so we're talking about the first time home buyers, and to say basically get pre-qualified before you're out there and ready to do that, to be able to come up with a plan, to have the discussion about the different loan programs so that you're educated on that, looking into grants, as far as possibles and options. Is there anything else that the first time home buyer really needs to do? I know you mentioned the budget. That's one of those things that I know it'd be really handy if people, like, say, they would be taught this in school, but for some reason that's not
Schools don't
in
offer that.
Schools, they don't offer that. But yeah, they don't offer home ec anymore. That how to balance a checkbook or any of
And
that
how to
kind of
bake.
stuff.
That was the same class. That was amazing.
That was the same class.
That's how I
Yeah.
learned how to bake. Yeah. It's at home ec. Also balancing my checkbook. Also doing my budgets the same class.
He does make a mean
write a
strawberry
check.
pie.
Yeah, thank you.
Yeah, I'll say that.
So, but anything else for the first time home buyer that
So I always say, like, ask, this is first time, second time, third time, is when you're shopping lenders, you want to ask rate and closing cost. So a lot of people don't understand that that's the same thing at the end of the day, right? Because somebody may have a smidge better rate, but their closing costs are $10,000 higher, and you're not getting a better deal, right? It's a thing called APR, which is annual percentage rate, and that ties how much the closing costs and fees are that's associated with that mortgage. So it's good to ask both those questions, right? But again, just asking the questions about, cash to close. Sometimes people want, their spouse on title. They don't know that if you're married, you could have your spouse on title and not be on the loan, and they still technically don't have, 50-50 of it. I have to have the conversation with so many people as well because they don't really understand that. So, I tell people as a joke, if you love the person, put them on title because they don't have to deal with the paperwork later, right? So if you don't really like them, then you leave them off title and then go through probate later and prove that they're your spouse, right? That's obviously a joke, but like, if having that person on title, if you're married, is very important because God forbid something does happen, then that title automatically goes to your spouse. No questions asked, right? You turn a death certificate, boom, it's now their property. They have to go through court and probate and all that stuff. So those conversations are important. Again, the cash to close is important. The products, as we talked about, is important. The closing costs, rates important. I mean, so overall, there's lots of factors that play a role in what the best direction is, but just asking those questions and not being afraid, right? I tell people, don't be afraid to ask a question. Just because you have no idea what the heck you're talking about, ask a question because you don't educate yourself unless you ask those questions, which is what I did for the last 24 years. Is how I became so knowledgeable as I asked questions. If I don't understand something, I'm like, I have no idea what the heck's going on here. How do I get to this next step? How do I educate myself on understanding what I'm doing here, right? So again, it's just if you have no idea what you're doing, just ask questions. And if you don't know what questions to ask, then make sure your lender's giving you those questions to ask up front.
Yep. And the other thing, so you mentioned the APR on there. The other thing that I noticed is to watch is the buy down of rates. I've actually seen it where where lenders will actually quote a lower rate, but then charge points to be able to buy down the rate to get to that rate. So sometimes buying down rates is a good choice. Other times it's actually a waste of money.
Yeah, yeah. So
So-
so technically, if the lender's doing their job, which not everybody does, they'll look at with a savings per month and they'll analyze it how long it takes to break even. So when you're doing it, a math calculation's easy. You take the amount it costs to buy the rate down, the savings per month, you divide that, and you see how many months it breaks even, right? Sometimes I've had LEs, loan estimates from buyers that send me these. And I'm like, it's going to take you 120 months, so 10 years to break even on this discounted savings. At some point, you're probably going to want to refinance. You're going to want to sell your house. You need to pull some more money out for the project around the house. So it makes zero sense for paying this discounted rate, right? So you can refinance for a lot cheaper than sometimes you buy down. Now, some days the pricing on the market makes sense to pay for a point and buy the rate down. Sometimes it makes no sense whatsoever, but you just got to analyze what the savings are and how long it takes to break even. And again, like there's on VA loans, we waive lender fees for vets to say thanks for their service. Well, on those situations, sometimes it makes sense to buy it down because you're not really paying any closing costs to begin with. And so paying a little bit extra money to buy the rate from a 6 to a 5.5 makes sense that day, right?
Right. Okay. So that's one of those things that there. The other one that that trying to figure out if it makes sense or not is what conversation do you have about the length of mortgage? Because the difference is a 30-year, a 25-year, a 20-year, a 15. I mean, it's one of those. How does that conversation come up, and then how do you deal with that conversation as you have that?
So that's back to budget and affordability, right? Some people can afford a 20-year, some can only afford a 30-year, some can afford a 15-year. So we have that budget conversation of where they're going to be at and what the purchase price is. Now, 30 years, it takes forever to get your principal bought down, right? It takes 5 to 6 years to start making a dent. A 20-year, I tell people it's almost 50-50. You're paying 0.5% interest, 0.5% principal. A 15-year is like 66% principal. So you build your equity so much faster, you can afford a shorter term. So whenever I'm having a conversation about refinancing, for example, sometimes their payment's $2,000 and then go from a 30-year to a 20, keep the payment the same. At that point, you're saving a lot of interest over time. So we had that conversation, but again, it's about the budget. When we're doing the budget, that's when we have that conversation of where you're at. And if you can afford a 20-year, 15 years, you're going to build your equity so much faster. And also for the next house you want to buy and upgrade in 5 or 10 years, now instead of having a $15,000 equity, you got $110,000 equity because you paid your principal down so much faster.
Right. So that's one of those things that comes through there. And it's what I see is people don't see that there's such, in some cases, the difference between a 25 and a 30 year is only a few bucks. I mean,
$80, $100 sometimes.
Yeah, I would say 50 to $100 sometimes as far as that. So whenever they look at that comfort level as far as where that goes. The other thing that brings into that is that if you do decide to take the 30 and be safe, I mean, paying a little bit extra on principal. On how much that makes. I know but correct me if I'm wrong here, but I say basically if you make one extra payment per year towards principal, I mean, on a 30-year note, if I remember right, it was like 7 years savings.
6.5 years, yep.
6.5 years savings on a 30-year note by making one principal payment extra per year.
And you can do that one lump sum, or you can do that per month. So say, for example, your payment's $1,200 a month for principal and interest. You pay $100 a month, or $1,200 in May. You do the exact same thing. And again, you save thousands and thousands of dollars of interest by just paying a little bit here, a little bit there. But it's back to affordability. Can I afford that, right? You don't really notice a difference now, but you'll notice a difference big time in 3 or 4 or 5 years down the road when you're paying your equity so much faster, right? So again, if you can afford a little bit here, a little bit there, that's the way to do it. If you get a bonus in December, you don't have to buy a bunch of Christmas, then you take the extra money and just lump it and pay one extra payment, and you're saving that much time. You're building your equity in your house, build your wealth, that much faster.
And that's what people really need to be looking at is actually this is building their wealth. And it really, and as far as a home purchase, I mean, it's one thing. It's not just buying a home. Okay, this is one of the first steps for many people to actually start building wealth in their life.
The upgrade from there. It's amazing to me between inflation and building, lowering paying down your equity. That how many people that is their spring to go either buy that piece of land that they wanted or that upgrade of the house or from there that, I don't think I realized that when I was the young person, getting into real estate or going to buy my first house, how much those paying that in is your springboard to the next step. is buying that and building that wealth initially, you know.
Yeah, and I'm going to say this. I know you guys are landlords, so don't take this the wrong way. But if you have $1,000 a month payment, right, you're paying your landlord $12,000 a year for rent. If you do that over 10 years, you're $120,000 that you're paying your landlord in rent to buying their wealth, right? So why not create your own wealth by trying to afford a house that's in the same budget you're paying rent for, and now you're building yourself wealth, and you're making yourself, again, 5-10 years down the road, you can buy the bigger house because you have more equity in your home. You can, with the appreciation you get every single year on the house. I mean, there's so many different things you can do. But I've had to talk to people that's rented for 20, 25 years, and again, they're in the exact situation they were 20 years ago. But if they bought a house 20 years ago, for the $90,000, it's worth 210 now.
I will play devil's advocate
Yep,
there.
I know.
And the devil's advocate is if you are somebody who does not do maintenance and you do not take care of your house and do those things that make your house still worth the money when you are ready to sell, and you aren't going to do repairs, then you might as well rent.
I agree with that. Or if you don't want to cut your grass, or you want to fix your water heater, you don't want to pay that. I 100% agree with you.
And it used to be that you had to live somewhere 5 years to build any equity in there, at least. It used to be. But then inflation came, and we've seen some funny things since COVID of how long it takes to stay. You could turn and make money rather quickly. So, I mean, there's no crystal ball on that situation. But it used to be you had to live there for a certain amount of time to really,
to be able to recuperate your closing cost.
But that's back to your guys' term that you were discussing, because it takes 5 to 6 years to actually start making a dent in how much you own the house. And for many years, you gain 4 to 6% appreciation. Well, yes, since COVID, like the 2020, 21, it was 19% you made one year, then 15%. It was just the appreciation has gone up so much. That's why the housing market is, increased for price, the average price range. And, but again, that's where, if you do a 20, 25 or a 15 year, you don't need to be there in 5 years to make a dent. You're already making a huge dent from day one.
Absolutely.
If that makes sense.
It does. It does make sense. But you have to, all the pieces have to add up for it to work. I mean, we've had many times in the past where people wanted to sell and then they don't have enough to really get out of it.
And there's different factors with that. Sometimes the market's flatlined. It hasn't flatlined in like many years. But also sometimes they're not paying extra on the mortgage, or a 30-year minimum only, right? And the other times, some people do cash out refinance to pay off all their credit cards and their cars, which is, if you're going to be there for a certain amount of years, that makes sense. But if you plan on selling the next 2 or 3 years, it does not make sense, because you might as well get your house on the market and sell it to pay that debt off. Because really, you don't have any equity. You just use your equity on other items, right? Like,
that's a good point. Whenever you really look at it.
Yeah. So I have a lot of times, like, again, you're pouring out 80% or 90% or 100%. As if you're a veteran, you can borrow 100% of what your house appraised for. Well, if you have 100,000 equity, you pull it out, and yes, if you're going to be there 10 years, you pay your cars off, or you pay your credit cards off, or you build the barn, or you build the extra extension on your house. That's what you want to do, because that's your best plan of action for long term. But if you're going to be there for 2 or 3 years, now you have no equity in 2 years. And so, again, you're then now scratching, for equity. Does that make sense?
Yep. So, I mean, that's one of those things that in the loan process, there's so much to a loan process as far as where it goes. And there's so many different loan processes and so many different lenders as far as where that. But they're just, I mean, right now, like rate.com, how many lenders do you work with now today?
So we have a lot of conforming lenders and also a lot of brokers as well. So I don't know the exact amount we have. We have tons. We have like almost 300 products total. I'm not an expert at all 300 of them. I mean, so, but we have, we deal with Chase and US Bank and Fannie and Freddie and Ginnie Mae. And so we deal with all the big lenders on our end, but we also deal with a lot of the non-conforming loans as well. So we deal with like the portfolio loans, not the portfolio, but the bank statement loans, the stated income loans, and the DSCR loans that don't actually meet the conforming rules, the qualified mortgage rules. They're coming back to the non-conforming world. However, it's stricter than it was a long time ago. So you have to have better credit and you have to have money invested. But if you're a self-employed individual that doesn't like to pay taxes and you write everything off or don't claim everything, but your bank statement shows you make 10 grand a month for the last 12 months and you have 20% to put down, there's an option for you.
Wow.
Right. And so, again, there's so many different, again, the DSCR, if you own a home for 12 months on your credit report and your rent's higher than your mortgage, well, then you qualify. As long as your credit score is a certain range. And so you have 20% down. It's just, boom, there's no bank statements, there's no pay stubs, there's no W-2s. Like, it just, you qualify. So.
Well, there's so many things to choose from. It's one of those that we appreciate you having you on here. And like I say, that's one of those that I think that we're going to need to have you back a few times to get into all of the different products and getting some knowledge out there to the buyers on what they're able to do and things to look at. So we absolutely appreciate you coming on and appreciate you working with us for the years. I mean, like I say, so you and Brenda have been working together for 23 years over the course of the time here.
That's weird. She's only 29, but like,
Yeah.
so I'm happy. I appreciate you guys being honored. I'm honored to talk all the time. All I have to say is, in an office, make sure when you're choosing your team, right, your realtor and lender team, that you're choosing people that know what they're doing and have experience and they're expert in what you're trying to do, and ask those questions, right, and feel comfortable. There's some people call me that don't feel comfortable with my personality, and that's okay, right? You want to work with somebody else, there's nothing wrong with that. Make sure you feel comfortable in what you're doing and you're investing in your future. You need to make sure that the team is set up correctly from the beginning to the end.
Education, experience, and exposure. That's what we want to bring to everybody, all of our clients.
Yep, absolutely.
Yep.
Appreciate it.
Awesome.
Thank you for joining us today on the Peddler Perspective. If today's episode sparked a thought, a smile, or new idea, share it with someone who'd enjoy the ride. Until next time, we'll be here, working the land, serving our clients, and bringing you more stories worth hearing.